All right, Wall Street is shrugging off all these concerns right now. The Dow's still in and out of, 21,000. NASDAQ, S&P in and out of records. So I think the markets don't seem too much concerned with all this drama over Donald Trump and what's going on. But again, that depends on the perspective you take. And for that, I go to Dr. Henry Kaufman. Now, he used to be known as Dr. Doom. For a lot of younger folks among you might just say, well, boy, that's a heck of a moniker. But the reason was because in the middle of a party, he would remind people, wait a minute. But he wasn't always just doom and gloom. He accurately predicted almost to the day in August 1982, when we were in the midst of a recession, that things were turning around and that something big and better was on the horizon. Wouldn't you know, he was right each and every time. And over the years I've had an opportunity to interview the good doctor. It was a tutorial, so I always learned a lot. And he always suffered very stupid young reporters patiently. The Economist, and the author behind now his fourth bestseller, Tectonic Shifts in Financial Markets, Dr. Henry Kaufman, Dr. Doom. But I'm going to go with Henry. How's that?
Thank you.
Did that ever bug you, the Doom thing, the Dr. Doom thing?
No. What would bug me really would be if I had something that was negative and turned out wrong. That would bother me. Yeah.
But it wasn't always doom and gloom. Like you said, you famously predicted the turnaround.
Yes.
That would be the wind at Ronald Reagan's back in '82. But yet some of the headlines were showing back in those good old days, Doctor, it was you were like Frankenstein almost.
Well, in August '82, as a result of that prediction, we had the biggest rally in the bond and stock market.
That's right.
In the entire post-war period.
But we should also say, go back a few years, back in the 70s, before interest rates really took off and inflation was going to be a problem. You accurately saw the inflation wave to come and how high interest rates would go. And I remember a lot of people laughed at you when you were talking about double-digit rates and all. Then it happened. Do you see anything like that now over the horizon? Everyone seems to feel rates are going up right now. Anything like that? No,
I don't think we're going to return to a prime loan rate of 21.5% and long government bonds at 15%.
Incredible, huh?
The previous secular peak. I think we don't have the firing power in the financial system to bring that about. There are too many inhibitions in the financial system today. We have a lot of leveraging that's already going on. Business corporations do not have the credit quality that they had 2-3 decades ago. Today, business corporations, many of them, are becoming below investment grade. Back in the 1980s, we had 60-some-odd business corporations rated AAA. Today, we have 1 or 2.
Wow.
Back in the 1970s, we had 15 financial institutions, banks, that were rated AAA. Today, none. So the credit quality situation is really not anywhere near that it was a couple of decades ago.
But the debt is worse. Deficits are building up. Does that worry you?
Well, the deficits, the government deficit is not worrying me as much as the borrowing that is going on in the private sector today. The U.S. government still is rated AA+, and probably is the most acceptable credit in the world today. And I think for the near term will be. The dilemma is that we can't fire up the credit borrowing of business and of households because the debt levels are relatively high.
Even now?
Even yes, the conditions of households is better than it was 7-8 years ago, but it is not that strong if you compare it with a couple of decades ago.
Could we have another housing meltdown?
I don't think we'll have a housing. The latest housing statistics that just came out, as you know, show that the residential side is doing reasonably well, and there's some weaknesses in the multi-family sectors.
Right.
I think,
but nothing that alarms Henry Kaufman at this point.
Not yet.
Not yet.
Not yet.
But you know, do you ever wonder, and well, we might not get back to the Carter, early Reagan years, double-digit rates. Do you ever wonder that a lot of young people in particular, Doctor, who were used to 2-something mortgages, and now they're going to be 4-something mortgages, 5-something mortgages, well, to you and me, that is very low. And I was one of those with my wife at the time, got a 13.5% mortgage, and we thought we were geniuses. But a lot of these young people don't. And isn't that adjustment enough for them? I mean, that's a doubling of rates, albeit still at low levels, that they don't like.
Well, a doubling of interest rates from today is not cyclically or seasonally or anyway an enormous move.
True enough, but it gets them out of the market, right?
But it is an inhibiting factor. And I would say to you, my own view is that by the time we reach the first quarter of next year, housing will be considered to be topping out.
Really?
As an activity. Partly by the interest rate structure, partly by the fact that prices have moved up in the housing sector considerably in recent years. So when and if eventually we do get a tax cut, it will come at a time probably when housing can't be lifted.